Well, as the equity markets are now open for trade, I do want to bring in my next guest, Rick Pitcairn, Chief Global Strategist at Pitcairn, joins me in studio. Rick, as we get off to the races here and stocks regaining some momentum the past few days, how does this market look to you?
Well, it's certainly breathing quite a sigh of relief after yesterday's CPI print. I think the whispers were that number was going to be a little hot. And then people were looking at maybe a down January, which is a bad sign for the market. So a big sigh of relief yesterday. I think we're starting from a pretty advanced place in valuations. You know, we're 2 years into a bull market now. The third year can be tough. It can happen, but we'll have to see what January brings us.
Yes, we will indeed. And of course, this earnings season is now officially underway with the big banks starting to report. What is your expectation?
We've got a lot of expectations built into these earnings. They have to come in. I think any miss is going to be punished. We saw the bellwether big financials yesterday come in with some strong numbers and the day before as well. So far, earnings season looks to be a continuation of what we had in the previous quarters, which is either a meet or a beat pretty much across the board. If they keep doing that, they can justify these valuations.
What kind of portfolio positioning are you recommending to clients as we start this new year?
We're really lucky. We have clients that really do take the long-term in view. We're a 100-year multifamily office. These clients are much more strategic and tactical. So we always believe in having a good chunk of equities on the foundation of the portfolio. That said, you want to be diverse because these evaluations are high. There's risk in this marketplace that I'm not sure everybody's appreciating.
What is that risk that you see?
Well, I think there's policy uncertainty. You know, I think it's really hard to predict how some of these really bold initiatives that come out of the Trump administration are going to work their way through the market in the first quarter of the year. We're really happy to see the ceasefire that in the Middle East that got announced yesterday. We don't know how that's going to work out. And we got valuations almost priced to perfection. So we really need to watch how this rolls out in the third year of what's been a really good time for equity investors.
We have made it 2 years through this bull market. How long do you think it can last?
They can go for a while. You know, I'm old enough to remember the 90s when, you know, you could say the market was overvalued in 95 and we went 3 more years before we really had a setback. But I think long-term investors should say, you know, it's hard to time that exact moment in history when things are going to take a pullback, and just make sure that you have a full range of assets in your portfolio so that you survive whatever the market brings you.
I think that's a good takeaway. And of course, we know valuations very much in focus as well, right? We talk about some of the volatility. Some of these richly valued names might be at play in that regard. What more can you tell us about valuations?
Well, I think, you know, why don't we look around and find some companies that might not be at the peak of valuation. You know, you've seen since they announced Robert Kennedy at HSS, the healthcare sector's taken a hit. These are long-time, strong dividend-paying companies. They have a long-time record of solid and predictable earnings. Maybe look in that sector for a company like J&J that's gonna be a little less on the knife edge of valuation and expectations.
Interesting. Now, any pullback usually is healthy, right, in a bull market. Even some would say a correction, a 10% pullback maybe once a year, that generally is healthy. Do you agree?
Totally. I mean, and we should expect it as long-term investors. We shouldn't expect, well, the market's going to do 25% for the next 5 years running. It never does that. And we should realize that and take advantage of it in the way that we build our portfolios rather than be surprised by it.
Yeah, I think that's good insight there. We have a big deal coming to market today. Flowco, an energy equipment provider, priced above the range, one of the strongest deals that we've seen in this space in years. What signal does that send?
A couple to me. I think the IPO market is bound to be stronger under the new administration. It's going to be a little less stringent on regulations. Everybody thinks so, and you're going to see some stronger pricing, more vibrant IPOs. And I think the energy sector, natural gas, drilling, nuclear, you know, it's the really derivative beneficiary of what's going on in AI. What we're going to need as a society is a lot of power, wherever it comes from, and companies like this are poised to benefit from that.
What do you think about international stocks? We talk so much about the U.S., especially with the new administration. Is international something that you think is worth diversifying into?
I think we should have a core piece there. It hasn't worked since 2009, basically. But the dollar's very strong right now. The dollar just went on a run. I think at some point we get some dollar weakness, and if that happens, you'll have a strong representation of your international stocks. And if you're concerned about valuations in the U.S. and in those tight markets of the U.S., you do get some relief from that in the international markets.
Mm-hmm. Rick Pitcairn, thank you so much for joining me. Rick is the Chief Global Strategist at Pitcairn. We really appreciate it.
Thanks for having me.